Okay, risk management, probably one of the most important things when it comes to trading meme coins, especially with small accounts. In this video, I'm going to be showing you how to manage your risk and show you how to survive long enough in the meme coin space to actually make money. So basically, most people with small accounts think the solution is to risk bigger when it comes to their trades. Basically, they'll just have like all-in trades with quote unquote high conviction, and basically they're just hoping for that one big win, which is basically just gambling. And what I will say is risk management isn't really about making less money. It's about staying in the game long enough to actually compound your wins up. Because when it comes to meme coin trading, you are going to have more losers than you are wins, like majority of people are anyway. And also, let me put something in your head before I actually get into the nitty gritty of this video. Okay, for example, let's say if you lose 50% of $100 on a trade, yeah, you are going to be left with $50 because 50% of 100 is $50. You've just lost 50, you've just lost 50%, you have $50 left. Let's say if you wanted to turn that $50 back to $100, you would need 100% gain, yeah? So you went from minus 50, and then to be able to get back to your original amount of money, you would need 100% gain. Now, basically what this means is your money has to work twice as hard just to get you back into the same position. And this is what I'm saying about risk management, yeah? This is why risk management is so important. Okay, when it comes to risk management, rule number one is small accounts must play defense first. Only risk a small portion of your portfolio. Basically, your number one job with your account is not basically growth, it's survival. You want to protect your capital at all costs. What I would like to say is per trade, you should basically be risking 5 to 10% of your whole account. So let's say if you have $100, you should only be trading with $10. And the reason why I like this so much is because one win can wipe out 5 losses. And this is the beautiful thing about meme coin trading. And plus, when it comes to a small account, your main goal is to build up the account, not actually to make money. And another example I do want to say as well is, say if you have very sporadic trades, like you might bet 10% here, 20% here, 30% here. Let's say one trade you bet 10% and then you lose that trade, and then you bet, I don't know, 30% of your port on the next time, and then that's a loser as well. Well, you've just lost basically half of your portfolio, basically majority of your portfolio, because the percentages aren't staying consistent. And like I said, your money's going to have to work so hard to even get back to the level that you was. And it's just not worth it. When I say you need to stick to the same percentage of your trades, it's so important. That is probably the number one thing. Okay, rule number 2, do not top blast under any circumstances. I don't care if Elon Musk has just created a coin or whatever, you do not top blast, yeah? Perfect example. This is the reason why you do not top blast, is because basically, say if you see this chart, okay, it looks really nice, whatever, and you top blast. Let's say you bought in here. Okay, the chart's kind of ruining my example, but it doesn't matter. Anyway, say if you top blasted here, yeah, forget about all this. Say if you saw the coin going up, oh my god, it's going up 20k, oh my god, and then you top blast here. Well, all of the people that have bought here all the way up until this point are in profit. And what do you do when you're in profit? You either sell or you hold on. And basically, you are basically going to be the exit liquidity for everyone that has bought here, basically. And you might as well wait for a dip. And also on top of that, if you top blast, the fall is so great, and you know what I mean. You are basically, like, say if it does dip, you are basically missing an opportunity to buy because you've already bought in, and also the percentage you can lose is so much worse to whether if you would have just waited to buy in at a lower price. You know what I mean? So top blasting, big no. Also on top of that is you're building a very bad habit, because say if you do top blast and the coin does a 10x, you're basically conditioning yourself to be a top blaster, and top blasting 9 out of 10 times it doesn't work. So yeah, it may have worked that one time, and then you are basically convincing yourself it's going to work again, and then it doesn't work again, but you're going to carry on doing it because it worked that one time. You don't want to top blast, bro. I'm telling you right now. Okay, risk management rule number 3 is track your trades. Write them down. If you don't write down your trades, you are a fool. You are such a fool. Okay, let me explain the science about why you need to write down your trades, yeah, and you need to track your trades. But first, let me show you how to track it kind of like the right way. It's so simple. Anyone can do it. All you need is a bit of paper. You need to draw a straight line going down the center of the bit of paper. On the left hand side, you need to write wins. On the right hand side, you need to write losses. Then every time you take a trade, or like say if it's a win, it's a 30% win, you would write 30% in the win column. Say if it's 20% loss, you write 20%. And basically, at the end of the day, you add up all of the numbers on each side, and it basically tells you if you're profitable or not. You know, say if you have, I don't know, 180% wins and, you know, 38% losses or whatever. Obviously, you know you had a profitable day, but that isn't the magic of this. So the reason why that this is so important when it comes to risk management, because after a while of writing down your trades, yeah, and say if you are not a profitable trader, after a while of writing down your trades, yeah, you are going to start looking at them losses, and they're going to be more real to you. Like, you know, you are going to get sick and tired of writing down minus 70%, minus 60%, minus 50%, and you are going to be, it basically brings your losses into reality a little bit more, because I can't lie, writing down minus 70% twice in a day, it hurts. It hurts. But normally you would take a 70% loss and you'll just forget about it, because it's not there staring you in the face kind of thing, you know? So what this actually does is this actually makes you more aware and more selective of the trades before you even enter, because at this point, losing isn't in the back of your mind, it's at the front of your mind. You are thinking to yourself, yo, I don't want to lose, I don't want to write down another loss on that bit of paper, so I need to be very more selective of what coin I actually enter, and even getting in at the right price. So this basically just kind of enforces your trading psychology that little bit extra. And this is probably the number one thing that took my trading to the next level, is because I was taking loss after loss after loss and just in and out of coins so willy-nilly. But after I started writing down my trades, and after I started writing down what trades I was taking and stuff like that, it kind of made me a bit more serious about trading. Like, this isn't like a game anymore. I can't just be in and out of trades willy-nilly. I need to take this more seriously. And bro, when I say writing down minus 60% hurts, it starts to hurt after a while. I'm telling you that for free. Yeah, it actually does. So yeah, this is probably the number one thing that I would say that you need to do: write down your trades. Okay, risk management rule number 4, I believe, is you need to take profits, yeah, consistently. You need to get very comfortable with pressing the sell button. I'm not saying you need to sell the full amount, but let's say you're up 50% or even like 100%. Just take initials, because this game is so fast that you can go from plus 120% to minus 10% within seconds, yeah, within seconds. And it's a kind of scary thing, and you kind of get regretful, like, oh, I should have sold here or whatever. And that could work on the other side of like, oh yeah, I sold, but it did a 10x. It doesn't matter. You made money, and that is the main thing. You made money. You're building up your port. You haven't lost money. That is the main thing you need to think about, is not losing any money. Remember, the aim of the game is to build up your account, not to make money. When it comes to taking profits, people find it, like majority of people in the space find it so difficult, because they feel like that they are going to be missing out on gains. Like, say if it does do a 10x or something, and it's kind of reinforcing the thing about being emotional when you're trading. You need to be a robot, which is very hard. If you protect your account on the downside, the upside kind of takes care of itself. I hope this video did help you out. If it did, leave a like, comment, subscribe, and until next time, it's been your boy. I'm out.